Recognizing a sell signal and a close below the T line is a definite confirmation that investor sentiment that was producing this uptrend staying above the T line has now changed. Now what do? Well, you can see the gap down doji was indecisive. Then it moved positive. The market, this is the Dow, moved positive and did a doji yesterday. Today it opened positive and traded lower. So it's still indecisive. And the main factor is each individual candlestick formation is showing indecisive trading, as well as the fact that even though it's moving positive, it's still not above the T line. This alone tells us we still want to be very cautious that any buying at this point still has to be confirmed with the fact that the moving averages or the major indexes have to get back up above the T-line area. That same analysis can be applied to the Nasdaq as well as the S&P 500. Both opened higher today, but traded lower and still trading right below the T-line. You can see visually that after they broke the uptrend, right now they don't really have any major direction. So this puts us in a situation where, because we know there's no major direction in the market right now, having both long and short positions in the portfolio is a rational strategy at this point. So shorting something like BYND, Beyond Meats, is logical because notice your left-right combo, evening star type signal, then a gap down back below the T-line. And this, if you look at the chart on a longer term, over the last 4 or 5 months, it's been in a downtrend. Tried to consolidate, but when it have another sell signal trading back below a resistance level, such as the T-line, it tells us investor sentiment is still in a downward move. This becomes a high probability trade setup. At this point, if not shorting the stock, you can be buying puts with the expectation that if it had a big strong move so far, the next wave to the downside could be substantial. The T-line can also be used on the long side, obviously. We can see the J-hook pattern, and we can see that it's maintained its upward trend. This is EVER. It's maintained its uptrend even though the market sold off hard over the last few days. A very simple trading rule is you can stay long as the uptrend does not close below the T-line. Our recommendation to short NVTA was very simple. The uptrend was over. We had potential reversal signals and a close below the T-line. We were seeing whether they were going to support on the 50. They didn't. Now we have a very simple analysis that we're in a downtrend with sell signals staying below the T-line, not supporting at the 50, and our stochastics are telling us we could head lower. What becomes our first logical target? The lows right here. The next logical target, the trend trajectory that could take you down here. Everything that you visually look at on a candlestick chart is merely common sense put into a graphic depiction based upon what normally happens in human nature. That'll be it. We'll see you in the chat rooms.